In this chapter, we'll discuss about OTS. OTS stands for one-time settlement. So OTS is an agreement where the defaulting company, that is the company that has failed to repay the loan taken from bank, so the defaulting company and the bank will come together for an agreement. So the agreement will be like, instead of paying the entire 100% of the loan, they'll agree from say 80% or 70% of the loan. So bank and the borrower will come to an agreement where the bank will agree for part payment of the dues, and banks will not take any legal action in further. That will be the end of the loan for them. So it is usually done when borrower cannot repay the money and the interest accrued has surpassed the principal amount. Okay, so principal is say 1 crore, the interest which initially was like 10 lakhs, 20 lakhs, ultimately it has even exceeded 1 lakh. In those cases, banks usually take up OTS. Mostly OTS happens in very small accounts, MSME accounts, where the number of defaults are high. And as per RBI, there are guidelines on OTS. OTS cannot be like, if there are no guidelines in OTS, there might be some frauds going on where the higher management of the bank, whoever has powers, can get into some deal with the company, and even though the company can pay 100% of the loan, maybe they'll settle for less than 100%. So there are guidelines, okay, RBI guidelines. So bank can enter into OTS provided the borrower agrees to pay 100% of the outstanding balance in the account available on the date on which the account was declared as NPA. Okay. And usually OTS is exercised when there is no other scope of recovery. And one thing happens is it will affect the retail score, the score of the borrower. Okay, in future, if they want to take, the credit score will be a bit on the lower side. So taking loans in future will be difficult for this particular borrower. So if you get a doubt that there is a scope for fraud, yes, it is true. So what happens usually is one person will not be given the entire powers to settle for OTS. Okay, in the bank, the OTS application goes through some many layers and committees. So no individual executive or officer will have the power, will not have the discretion to take this decision. Okay, so there are set procedures to be followed. And also, if a borrower has 100% security, the bank usually will not consider OTS. In that case, it can proceed through SARFAESI and sell the assets. Usually in cases where bank has exhausted all other options and it's finding it difficult to recover the loan, then they'll go for OTS. Then there's something called compromise settlement through Lok Adalats. This is an authority that is constituted under the Legal Service Authorities Act. So this legislation provides free legal services to the weaker sections of society. So Lok Adalats will be organized, and the aim of Lok Adalats here is to amicable settlement of disputes. Okay, so the authority will try to reduce the number of pending cases. Even dishonour of check cases will be entertained here. Small value loans up to 20 lakhs can be settled between the lender and in the Lok Adalat forum. And typically, those cases which are pending in a court or at a pre-litigation stage are usually taken up by Lok Adalats. So they'll have the same powers as civil courts, Lok Adalats, and whatever decisions they give will be binding on all the parties. They cannot be appealed. And besides Lok Adalats, banks also have 2 other channels to recover the loans. Okay, that is the DRTs and SARFAESI. That is also available. So the questions you need to be prepared here are: what is full form of OTS? What is meant by OTS? What are RBI guidelines in respect of OTS? When is OTS usually exercised? And what are Lok Adalats?